welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the opening action on the D Street. Well, of course, as overnight triggers and yesterday's cues stand, we did see finally recovery coming in the Indian markets, and of course, there are further cues that are positive. Overnight, there were higher moves on the US stocks, and in the Asian markets also today we've seen a positive opening. This is all after the US decision to pause tariffs that is triggering a strong recovery from lower levels as well. Now, of course, as far as the Indian markets are concerned, we recorded the best day since the first week of January. Both the Sensex and the Nifty have now turned positive for 2025, rising nearly 2% each. Yesterday, we did see the BSE listed companies' market cap also gained by more than 5 lakh crores. All the sectors contributed to the rally, with energy, banking, metals leading the gains. PSU stocks also came back in favor. 2.7% of a rally in the PSE index is what we've seen. As another trigger, we've also seen the foreign investors turn buyers as on Tuesday for the first time after 23 consecutive sessions after net selling. And we've seen FIs buy about 809 crore rupees, the first instance of net buying since January 2nd, and when the FIIs had bought 1507 crores. Of course, what we will also look at the RBI's MPC policy meeting. That will be the next key trigger for the markets. It will begin its last policy meeting for the ongoing fiscal year today. That's February 5. And the results and the announcement will come in on February 7 as well. As far as some of the commodities are concerned, gold prices hit an all-time high on Tuesday as investors flocked to the safe haven assets following China's retaliation with tariffs on the US spot gold increase. And we did see a $28.43 dollars an ounce kind of a level. We've also seen the oil prices rebound as well. And of course, there'll be many earnings that the markets will be reacting to. Tata Power will be important to see because the earnings have come in higher than the estimates. Profits are climbing about 8% in the third quarter. Titan, of course, will be in focus. Although the earnings were largely soft, revenue lower by 600 crores versus the estimates. Margins fell by about 180 basis points as well. Profits dipped by about 4.8%. Tourism space, Lemon Tree hotels will be in focus. Here we saw the net profit surge and the margins also improve for the company in Q3 versus earlier. Triveni Engineering, again, we've seen a surge in the net profit, 69% of growth there, revenue uptick of 3%, EBITDA improvement of 60% as well. So that also will be in focus in several other stocks. But time to welcome our guest on board. We have a very special guest joining in. Mr. Gaurang Shah joins in, Senior Vice President, Geojit Financial Services. Warm welcome to you, sir, and thank you so much for joining in. Finally, your foreign friends are pouring in money, sir, in the Indian markets. What do you have to say?
Well, thank you very much, Sakshi, for having me on this platform, and morning to all of you all. So pleasant surprise. What I have been singing a song all this while, that believe in the Indian growth story, believe in the policies, budget delivery. We were interacting on Saturday, 1st of Feb.
Yes.
And I would only say this thing, that given our strength and performance, the FIs will be forced to come and look at India as an investment destination, Sakshi. Now, whether they come now or whether wisdom prevails upon them and their fine sense of judgment and then they come later, it is up to them.
Yeah.
But I strongly believe that, yesterday's comeback was very strong on fallback of both local as well as global cues. You were referring to the policy meet on 7th of Feb, that is Friday. Expectation is building up about a 25 basis cut. Whether it gets delivered or not get delivered, I will still be an optimistic person as far as the markets are concerned. And my sense is that second half, possibly calendar half I'm talking about, July to December, I think all of us will be surprised with the kind of moves that we are going to see in the market. That's what my anticipation is, and I hope I'm right on that.
Absolutely. Once the bulls are returning to the D Street, what is it that will catch your attention now, or has it already begun? And now, if you're looking at a strong recovery that could take place, we're already at 23,700. There's another gift Nifty pointing out to 23,850 kind of a start today. Where will you keep your fresh focus coming in now, sir?
Well, so I think all the beaten down names will come back. We also heard the Defense Secretary statements yesterday during a press conference. He highlighted about the orders that are going to come in thick and thin for the defense sector.
Yes.
FMCG discussed multiple times. The budget has only given a huge tailwind positive for the sector. Excuse me, positivities of whatever the finance minister done in the budget will start trickling in the new financial year, second, third quarter onwards. And my sense is that earnings, which whatever we've seen up till now, Sakshi, is a shade and a color better than what we've seen in second quarter. And I think
Hmm.
one can comfortably assume that fourth quarter and the next fiscal is going to be even better. Only
Okay.
the fact remains is the geopolitical situation and the crude oil prices, but I hope both of them settle down at a lower level.
Okay, we will trickle down a little bit more and understand about these pockets a little further. But I also wanted to ask you about this return of the metal space. Is this going to be again something which is going to be volatile? How do you think one should approach the metal counters at this point in time? So we've had decent numbers from some of the major companies here, but the way the sector has been, it's been absolutely volatile, lacking any kind of a clear direction. So what's your takeaway here?
So metals has always been a very difficult and a challenging sector to, look at from an investment perspective. So there are both global and local news flows that have its effect on the entire metal pack, especially from global front and from what comes out from China. I'm sure you would have read about that deep seek valuation this morning.
Yes. Yes.
And I've always maintained that whatever comes out of China, I take it with a fist of salt, not with a pinch of salt. So I am once again right on that front. Now coming back to your question, metals. So we remain positive as a brokerage house. The
Mm.
problem is the time horizon. So if you are looking at year and a half in other sectors in terms of performance return, then when it comes to metal, you need to give it 2.5 years, and don't expect any flyaway returns. Let me be very, very honest. So we remain positive on Tata Steel, JSW Steel, GSPL, Hindalco, Vedanta, NMDC, to name a few. And my sense is that whatever broad budgetary allocation has been made towards infra and development
Mm.
will uh, give push to consumption. How competitive companies are to maintain their profit margins and lower their operating expenses and input cost is up to companies individually. But they have been doing their bit in terms of rationalizing that operating cost and giving a boost to the profit margins. So let's hope that it turns out that way. And my sense is that whatever is happening in China and the tariff front, government should be proactive in terms of anti-dumping duty and whenever necessary, hike the import duty as well to give a level competition to the domestic players.
Right, but Gaurang sir, looking at all this tariff talk, are there any sectors which are more vulnerable to others in the Indian domestic market? And how should investors be really looking at that key overhang?
Well, so Monday morning, I mean, on a lighter note, uh, President Trump has not yet put any duty on India, right?
Yeah.
But on Monday morning, I was flooded with anxiety because a lot of intelligent people on the street on their social media handles, be it
Hmm.
YouTube, be it WhatsApp or XYZ,
Hmm.
have already put in tariff of 10, 15, 20, 25% from America on US. They were the president of the United States of America. So, and now come to the reality. Whatever tariffs President Trump had spoken about on Canada and Mexico has been put to rest for 30 days. China has done its, retaliation in terms of imposing their hiking their import tariffs on certain U.S. goods and services. I would say that India, even if it happens, actually, let me be a devil's advocate.
Yeah.
I don't think it is going to impact our economy or stock market that negatively compared
Okay.
to the Mexicos and the Canadas and the Chinas of the world.
Fair point. Okay, so we're not going to be as impacted as the others. That's the big expectation. So one has to really wait and watch to find out. So far, there is again talk of restraining as far as the tariffs are concerned. Rupee, therefore, has opened at 87.12. I wanted to also ask you about the currency factor, Gaurang sir. This is increasingly looking as something that we need to monitor day by day now. Is there a fear of rupee weakening further from here? What could be the repercussions? Why do you think the government is not doing everything to contain the rupee, or are we comfortable with this level? It's very difficult to really understand what our position is with the rupee.
Well, before I answer that, one more point I would add to that tariff discussion that we are having is 13th of Feb, Prime Minister Modi is meeting Trump.
Yes, yes.
So let's hope things get ironed out over there and there is a more logical approach via talks rather than putting tariffs on each other. So let's hope so. Now coming to the rupee, Sakshi, this is my understanding and I, I stand to be corrected if I'm wrong. Amongst the emerging market currencies, Indian rupee is relatively less depreciated against the dollar compared to the emerging market currencies. Uh, Somewhere around 85, when rupee weakened to 85 and beyond against the dollar, RBI did try to supply dollars and bring in a little bit of sanity. Now the problem is how much of artificial support via supply of dollar you are going to do, because you have limited resources in terms of dollars also, and you cannot afford to go on supplying dollars in the market when the dollar is strengthening across currencies, not only emerging market but even against all developed market currencies as well. So I would say that maybe on 7th of Feb, the Honorable Governor will have something to speak about in terms of what his views are and what can be done to put in a little bit of strength in the rupee against the dollar, not via dollar supplies in the market, because those are limited resources. Actually, you cannot go on doing it, and if you go on doing it somewhere, you will be caught in a much deeper problem than what you are into right now. So I would say let rupee find its own level against the dollar, and one more thing. Extremely strong dollar against the currencies across the globe is also not very viable
Yes.
situation for US.
Fair point. That's as far as the tariff talk and the overall trade concerns are there. Let's also move on to the other theme that you pointed out, and that's consumption. And clearly, that's the clear focus. Within the larger band of consumption, Asian Paints is something that I wanted to discuss. That has come out with the earnings. Again, a 23% drop on the consolidated profit came in at 1110 odd crores. Sequential basis, the net profit has, however, improved 60% odd, but the revenue from sales again on a year-on-year basis has fallen 6% again. On a sequential basis, there is some kind of an improvement. Last time around, we did see how battered the stock was when it came to earnings. Today, again, there is an indication of 3.5% odd dip further. There have been a lot of concerns that have been raised regarding competition in this space. How are you looking at this leader at this point in time and the entire paints industry and how things are shaping up?
So it is still the leader in its industry, Asian Paints, Sakshi, and we still maintain a positive view on it in Asian
Okay.
Paints. Yes, there
Okay.
are elevated levels of competition with huge capacities. Maybe there might be some new names that will come into this particular sector. And the fact of the matter that new players are coming in with huge capacity, you can possibly have an idea about the growth potential of this particular sector, because no wise man would put large capacity in place in a sector where there is overcrowding. So market is huge enough. The only problem is the recent numbers in terms of Q3, Q2, which was a huge disappointment. High margin product segment in terms of decorative paints also saw lower than expected volume growth, which contributed to the bottom line getting affected and coming below the street estimates. Um my sense is that this has been a wealth creator over the last 10, 5, 10, 15, 20 years. And after this difficult time is done and dusted with, I think you will have a little bit of more positive performance coming in from Asian Paints.
Okay.
The company and the management needs to do its bit in terms of bringing down the operating cost and giving a boost to the profit margins.
Fair point. Let's also welcome Osho Krishan, Senior Research Analyst, Technicals and Derivatives at Angel One, also on the show. Hi, Osho. Welcome and good morning to you. Tell us, after yesterday's sharp bounce and, of course, today's indications that we're getting in from the pre-opening trade, how would you trade the markets?
Very good morning, Sakshi and Gaurang sir. Well, looking at the overall trend that we are witnessing in the market, the last two trading sessions were very positive for the markets, and we have also emerged above the falling wedge on the daily time frame chart. So, with today's development of Nifty opening slightly around the zone of 23,800 is again a very positive development on the technical front. But looking at the derivative data, I am expecting that any dip towards the zone of 23,600 should be acting more aggressively towards the bull, because there is a decent put writing happening around the zone of 23,500 and 600, but on the higher end there has been not very significant strong writing positions on the higher levels by the call writer. So I'm expecting that the immediate range for Nifty is around 23,600 to 24,000 on immediate basis, and dips should be auguring very well for the bulls. But looking at the opening and the momentum that we are witnessing in majority of the space in the last few trading session, I am expecting that the counter or the benchmark index can see a further momentum towards the zone of 23,900, 950 on immediate basis, while for some kind of dip towards the zone of 23, 650 to 700 can provide some cushioning in the initial trading hours. But the broader range remains 23,600 to 24,000 zone.
Okay. Quickly, also, if you could tell us what your view will be on Asian Paints after the earnings today. We were discussing the fundamentals with Gaurang, and we'll also take a little bit of how technically, how should one really look at it. It's indicating a 3.5% opening down.
See, overall, Asian Paint has been struggling near the 21-day exponential moving average around the zone of 2,300 levels from quite a long period. And until it breaches the zone of 21-day exponential moving average on a decisive manner, till that time, it might remain in the sideways consolidation phase. But looking at the overall development, there is a possibility of formation of a rounding bottom formation, although it will be very early to say, because looking at the developments, it has been very subdued. So I'm expecting that any positive trigger beyond the zone of 2380 or 2400 odd levels can provide positive momentum in this counter. For now, it is expected to remain on the sideways movement. So it's better to stay sidelines from Asian Paint for the time.
Okay. Gaurang, the other space in consumption, jewelry stocks is something we'll focus on. Titan came out with the earnings, the way gold prices are record high levels internationally. And again, things are, looking as if investors want to seek safe haven amidst the uncertainty, geopolitically wise, that we are looking at this point in time. How would you look at some of these jewelry stocks like Titan?
Well, before that, thank you, Osho. Morning to you as well. So on gold, well, Sakshi, I would be repeating myself. I hope you would have
Yeah.
gone and visited your family jewel. And the expectation for gold, yesterday I was listening to the one of the gentlemen from the World Gold Council. Views are that though they don't give out targets in terms of gold dollar levels or rupee levels, but the general perception is that very soon we are likely to hit the all-time high $3,000 to an ounce on gold. And
Okay.
as a fundamental analyst, I have been always advising, and since the year 2002 2008, other than equities, gold was one particular precious metal that I had my inclination towards, and I've been tracking it since then. And that point of time, the 82,000 gold for 10 grams was at about 7.5, 8,000 rupees, Sakshi. I'm talking about way back in 2008, 2009. Uh, Still continue to be positive as far as gold as an asset class is concerned. Gold sovereign bonds are done and dusted from the government side, but there are alternatives in terms
Yeah.
of ETFs.
Mm.
There are mutual funds which are completely dedicated towards gold, and then you have investment in physical gold. So, and my advice has always been that if you have 100 rupees, for example, to invest, please invest 10, 15, 20% of that particular 100 rupees into gold related asset classes. Uh,
Okay.
the view is that gold prices are likely to move up. given the kind of geopolitical situation, uncertainty as far as tariffs are concerned, and of course, gold being a natural commodity, gold reserves are dilapidating at an alarming rate.
All right, gold prices are likely to inch higher. Best time to continue to accumulate gold and keep on investing regularly and allocate about 10-15% of your overall portfolio in gold related assets. ETFs is something that Gaurang is looking at. $3,000 is what you could be looking at for gold in the near to medium term for gold, is what Gaurang expects at this point in time. Osho, any of your favorites within the gold story? Would you look at the jewelers? Would you look at the financiers? What looks good technically?
See, technically, there has been a very strong rebound in Titan. So I'm expecting that
Hmm.
there can be a further movement that can be seen in Titan. So the
Hmm.
breakout has happened around the zone of 3500, 3480 kind of a zone. And if it sustains above the same, then we can see a decent and gradual up move towards 3750. And apart from Titan, even Muthoot Finance and Manappuram Finance are also looking positive to me. So all these counters can see a decent movement in the coming period.
What about PC Jewelers? It reported some financial recovery as well in Q3, profit reaching 148 crores. And it's a turnaround from last year's losses. Revenue surged to 1496 odd crores as well. No, in fact, 639 odd crore rupees, and that's up from 40 odd crores. So that's a 1400% kind of a rally that we've seen. How would you look at this one? Again, it's been a stock which we rarely discuss, but earnings have come in and therefore time to relook at it.
See, overall, this counter have seen a decent, taking a decent support around the zone of 13.5 to 14 odd levels, and with the consolidation that it has made in the last few trading weeks, and with the positive momentum or the gap up and circuit opening for the day, so I'm expecting that there can be a decent and gradual up move that can be seen in PC dwellers as well. So on the higher end, the immediate target comes around the zone of 18.5 to 19, while on the
Sure.
lower end, 13 and 13.5 is a very strong support, which historically have also cushioned this counter in the recent period. So I'm expecting 13 should be kept as a stop loss and 18.5 to 19 should be seen as a target in the short term period.
Okay, markets are opened, viewers, and green is what you see on your screen when it comes to the benchmarks. 23,780 for the Nifty, about a 44 point of an uptick. Sensex also higher. Nifty Bank up 0.4%, mid caps up 0.6%, small caps up 0.7%. Across the board, there is rally. NSE advances 1250 to 327 decline. So it's towards the positive that we are looking at in terms of the key benchmarks that we are looking, as well as the broader indices of mid and small caps are now inching further up, now 1% higher in trade. So strong surge being seen across the board at this point in time, especially in the broader markets. Banking gainers, you have Kotak Mahindra Bank, you have Axis Bank, IDFC Bank, even Bank of Baroda, that's all rallying in the early morning first trade action that we are looking at within the banking story. BPCL up by 2.8%, but Asian Paints result impact 4.3% down, 2250 at this point in time. Oil and gas story is looking up. You have BPCL, IOC, ONGC, all of them inching higher in the morning trading session right now. Freedom Finance is up and about 1.8% higher. Metal space, you have Hindalco that's inching higher in the morning trading action. You also have Trent that's buzzing 0.7% up in trade. IT's names like TCS, Wipro, they are both up and about. Infosys are up half what percent higher in trade, but Asian Paints clearly seeing that reaction on the downside as far as the opening trades and post earning reaction is concerned. Titan, we were discussing about it, 1.4% lower, 35.48 after the earnings impact that is being seen. Let's talk about the FMCG basket. Britannia today half odd percent lower. Tata Consumer Products is about 0.8% lower. But there is Reliance Industries, 1281, 0.3% lower in trade as of now. But what's buzzing? Angel One, 4% higher. There's this January update that is seeing a reaction as far as this one is concerned. Telecom, let's look at MTNL. Sharp move, about 16.5, 17% of a surge as far as MTNL is concerned. Okay, so that's an interesting one, right, in the morning trading action. Also, what catches your attention right in the opening?
See, from here on, there are various financial counters which are looking very positive to me. Yesterday, L&T Finance has given a very strong breakout and it is still hovering at a higher level. So I'm expecting that there can be a very strong continued momentum that can be seen in LT Finance. And on the higher end, I'm expecting the immediate target to be seen around the 200-day simple moving average, which is nearly 160. While on the lower end, 146 to 148 is a very strong demand zone, which is also the neckline of the breakout. So I'm expecting that 146 should be cushioning any kind of blips, while on the higher end, 160 is the target for this counter in the short term period. Apart from it, various other counters are also looking very positive to me. First one is Ashok Leyland. Ashok Leyland has seen a very decent traction in the recent period, and I'm expecting that with the kind of rebound it is witnessing from the zone of 200, there is a possibility for this counter to test the zone of 235 on a positional basis, while 200 should be act as a very strong positional support or positional stop loss for Ashok Leyland also.
Okay, got that. Gaurang, getting you in. Oil and gas is rallying. We tackled the metal space, but the other commodity space, oil and gas, how would you track this one?
This is also a commodity which is largely dependent on first is geopolitical situation given what is happening in the Middle East. Of course, there is a little bit of resolution and pipes of peace are smoked over there, but it's still very, very fragile, to be very, very honest. President Trump had also requested OPEC plus Saudi to reduce crude oil prices. I don't know how much of relevance or importance it's going to play in terms of bringing down the crude oil prices. Uh, for an economy like India, I think till the time we are sub $80 or $85 on the Brent and sub 75 $80 on NYMEX, we are relatively on the safer side. But we don't have to forget the other aspect of concern in terms of India's oil pool account deficit is the depreciating rupee against the dollar. So you have a depreciating rupee, which also creates a problem in case if the crude oil prices also have to move up. Depreciating rupee adds to the oil pool account deficit. We were able to secure our energy requirements in form of crude oil and gas from Russia and Iran to a certain extent. So that's a little bit of comfort zone. Uh, we as a brokerage house, we remain positive on oil exploration companies like ONGC and GAIL, and we remain positive on three oil marketing companies, that is BPCL, HPCL, and IOC. But this sector is also something like what we were, speaking about during the opening of the show, metal sector.
Yeah, yeah.
Have a longish time horizon and don't expect flying returns for this.
Okay. Another space within the consumption is retail also that I wanted to discuss with you, Varang, and rent within that is something that I wanted to come in again on, and also how we've just come to know that Reliance Retail has again launched the famous earlier erstwhile famous brand, Chinese brand Shein back. Anything that you think, because I remember a lot of women used to shop from Shein and they were very disappointed that this low cost space to buy all the trendy stuff like Zara at half the cost was taken out of the market. So anything that changes now.
Well, China once again, right? So I will possibly be a little bit adverse to this. And remember one thing: cheap does not mean the great quality, Sakshi. I mean, the fact that price tag is cheap, there has to be some kind of sacrifice that you do in terms of the quality of that particular fabric or an apparel or whatever you be it. As far as the sector is concerned, well, that is the retail side. We are positive on the sector. We don't have coverage on trend, but we do have coverage on shopper stop. And one thing that I've realized over the last, excuse me, couple of years, Sakshi, is there was a glut of flow from offline to online. My personal experience, I'll tell you, when you go and step into a retail store, you feel the product, you see the product, and you buy the product. It's a total different ballgame. Online, you can see possibly high resolution image of that product, which may misguide you and tempt you to go and buy that product. But when you actually get the delivery of that product, it is absolutely below the expectation that you would have had. So, earlier it was from offline to online footfalls. I think over the last couple of years, it is back to from online to offline. People rather want to go out to that particular store wherever he or she has zeroed down on whatever he or she wants to buy. Go out there, see the product, feel the product, experience it, and then buy it. So my sense is that footfalls are going to increase for retail players like the Trends and the Shopper Stops of the world.
Hmm.
And we are positive on the sector. Trend is a great company. I won't say buy, sell, and hold because we don't have a coverage, but we remain optimistic on sector and Shopper Stop.
Right. Okay. Parag, on that note, we'll thank you for being with us on the morning edition. And like always, you share some fantastic anecdotes and stories. So thank you so much. Appreciate your time with us always. And we really look forward to all your insights week on week. So hoping to see you very soon again. Thank you so much.
Thank you, Sakshi. All the best. Bye bye.
All right. We'll continue our discussion, viewers, with Osho right there and do some stock spotting at this point in time. In the interim, Osho, did you spot anything that investors should look at?
Yes, all the counters related directly to the equity market like CAMS, CDSL, and BSE is looking very positive to me. All these three counters have started gaining a strong traction and has already been up around 1.5 to 2%. But I'm expecting with the momentum, BSE is having a very strong technical setup, and I'm expecting this to continue on the higher end towards the bearish gap which it has around the zone of 5760 odd levels. So from here onwards, another 100 point of rally can be seen in BSE, while CAMS and CDSL are placed at a very decent levels. They have seen a very strong correction in the recent period and again have started gaining traction from the oversold terrain. So I'm expecting for CAMS, there is a kind of a short-term bottom formation for this around 3400, while on the higher end, I am expecting on a positional basis 4100 as a target, while for short-term perspective or for let's say a day trading, nearly 3740, 3750 can be seen for the day in CAMS.
ओके कैप्स को खरीदने का समय आ चुका है. कैप्स में एक अच्छा बॉटम फॉर्मेशन है. इस टाइम पे आप इसको डेफिनेटली देख सकते हैं. बहुत सारे लोग पूछते रहते थे कि इन कैपिटल रिलेटेड स्टॉक्स का क्या होगा. आज इंडियन वन और कैप्स दोनों में एक अच्छा मूव है, तो इन दोनों स्टॉक्स को आप अपने वॉच लिस्ट पर रख सकते हैं. Let's move on to some other stocks and see how they are moving. Mid and small caps are also recovering pretty sharply, Osho. Anything that catches your fancy within the mid and small caps, particularly sharp moves being seen on mid caps 0.8% higher, over a percent move on the small caps again. So the recovery is pretty much strong. Mid caps is now up 450 points in trade, and they're at the high point. What looks good?
Fertilizer space is looking very positive to me. All the fertilizer counters have seen a very strong traction. So counters like Coromandel, Chambal Fertilizers, Navin Fluorine, these counters have started gaining strong traction in the last few trading sessions. But technically, Chambal Fertilizer at current levels have seen a very strong consolidation breakout. So I'm expecting that there can be a further continued buying traction that can be seen in this counter towards the zone of 535 to 540 in the short term period, while the zone of 500 and 495 should be seen as a very strong support. So fertilizer space is overall looking very positive, out of which Chambal and Coromandel is looking more positive on the technical front.
Fair point. Okay, got that. So I hope this is also clarified as to how should you be really looking at the mid and small caps and where are the opportunities that can be spotted at this point. But let's again look at some of the other pockets. Okay, let's look at Zomato and Swiggy yet again. Again, Swiggy will be focused because of the earnings factor again. And we will have to see how the earnings really come in for the company. But Zomato came out with the earnings and there was disappointment. And after that, we did see a long-term, downtrend for both these stocks. They were under pressure. But Zomato over the last few days has also recovered from lows of about 204 odd. It's now up at 236. 423 currently on Swiggy. How would you look at these two stocks, Osho, now?
Firstly for Zomato, this counter definitely have seen a very strong traction from the zone of nearly 205 towards 235, 40 odd levels now. But one should wait for Zomato to get it to have a very strong closer above the zone of 240, because that is the 200 is simple moving average and it has a very strong significance while providing support or resistance. So I'm expecting that until it breaches the zone of 240 on a very decisive manner, one should stay sidelines from Zomato. Once it does, then definitely one can try to accumulate it for a shorter term perspective. 260 should be the target, while for longer term, around 275 to 80 should be seen as the next potential target for Zomato. So overall, currently the counter definitely have seen some kind of relief, but one should wait. If not having position, wait for it to have a close above the zone of 240. While Swiggy, on the other hand, can see very strong volatility today, and I am expecting that one should wait for the results to come out and how the counter reacts over the aftermath of the result, and then only one should take positions, because it is at a very crucial support zone. So any breakthrough or any breakdown below the zone of 410 can disrupt the short term technical formation for this counter. So any breach below the zone of 410, then this counter can see a very strong sell off towards the zone of 370, 380 in a short term perspective. While if the results are positive and the counter can see some kind of strong gaining from here onwards, then one can definitely accumulate, because anything above 455.60 can give a very strong momentum in this counter.
Fair point. Okay, so keep an eye out on what the earnings are, and once the reaction comes in, only then take a short-term view. Again, right now there could be volatility, and better to stay put till the time the results really come in. But this space is again catching my attention. You talked about CAMS, Angel One, now BSE, MCX, exchange-related stocks. All of them are buzzing in trade. What apart from CAMS also catches your attention right now within this space, Osho?
See, MCX is also looking very positive, because after a very long period of time, there has been a consolidation breakout in MCX. But
Mm.
it is already nearly 4% on the higher end. So, from a positional point of view, definitely the counter is looking to have a kind of a reversal or gaining a strong momentum from here onwards. So, from positional point of view, definitely one can hold their investment for a higher target of 65, 6600 odd levels. But for day traders, it's better to wait for some kind of correction, because it is just 15 minutes. There will be a potential correction or profit booking in this counter. So once it dips towards the zone of 58, 50, 5900 odd levels, then it will provide opportunity to accumulate it. So overall, the trend has reversed towards bullish, and I'm expecting that in the coming period, there can be a decent upsurge related to all the counters that you have mentioned just.
Got that. Okay, let's focus on some of the other pockets. Okay, let's discuss electricity, IEX. Another exchange that's been on top of traders' radar forever. It's been very, very volatile of late. We've seen highs, we've seen lows in the stock in the last few months. Now, January electricity traded volume is up 16% year on year, and therefore you again see some uptick on IEX. Would you get the confidence to look at the stock right now also, or would you still stay away?
See, overall, this counter has surged above the short-term moving average, but currently hovering around the 200 day simple moving average, which is approximately around the zone of 178.50. So I would rather wait for one more day of buying traction. If it happens, then there can be a continued momentum in this counter towards the zone of 188 to 190. Because if we will be seeing the technical chart, then in the month of December, this counter have tried to showcase a rebound, but again, the zone of 190 has provided very strong resurgence or very strong resistance, from where onwards we have again witnessed some kind of correction in this counter. So from here onwards, I am expecting if it closes above the zone of 180, then it will be providing an opportunity to accumulate for a higher target of 188 to 190. And that will be a very crucial zone. If it breaches beyond 190, then we can see a kind of a double bottom formation for this counter, and the target will be approximately 25 to 30 points from there onwards. So approximately 215 to 220 kind of a target can be seen on positional basis, but 190 is a very crucial zone, and one needs to keep a very strong watch over a period of time.
Okay, got that. So I hope this is also clarified a lot when it comes to the entire space. Okay, let's discuss tourism space also. Lemon Tree Hotels came out with the earnings. There's some uptick here, and there has been continuous focus on this one. Many experts believe that tourism will be a theme that one should track because the government is continuously focused on developing this space. Even in the budget, there were a lot of announcements. Top 50 destinations to be looked at in terms of tourism destinations. Heal in India, medical tourism is something that the government is focusing on. So there is higher allocation for that. So hospital space, hospitality space, both are going to be in focus. Therefore, Osho, tourism, travel space. What looks good to you?
This is a space which has always seen some kind of a strong traction whenever we talk about the liquidity in the overall market. So I'm expecting that these counters like Lemon Tree, Indian hotels have seen a very strong traction in the last 4 to 5 trading sessions. And technically, Indian hotels is looking much more better to me on the technical front, although it has emerged near to its target zone of 850, but still it has a room to reach approximately 15-20 points from here onwards. So Indian Hotel is looking very positive. It has consolidated around the zone of 780 and then have seen a consolidation breakout. So I'm expecting that even in future, if there will be any kind of dip towards 810, 800 odd levels, then that should be auguring very well for the buyers. On the higher end, 850 is the first potential resistance. But if it breaches 850 on a decisive manner, then we can see 880 to get tested in a very short term time span. So overall, this space is looking very positive. Indian hotels will be the preferred pick, but again, Lemon Tree is also looking positive to me, and it has seen a very strong movement of nearly 4% in the day and has seen a strong breakout from the zone of 146. So if someone is already holding position, it is advisable to hold. If not, then wait for a kind of a profit booking in this counter. 146, 145 will be an apt zone to accumulate it. Higher targets, it seems around the zone of 162 in the short term period.
Okay. All right. Got that. Let's now look at something more interesting. Okay. So we were discussing before you had joined in with Gaurang that now the theme will be the upcoming policy meet. It starts today for the RBI, and the next 3 days it will be up, and this will be the clear focus of the markets. There is a expectation that there could be a 25 basis points of a rate cut. If that happens, how are you looking at the rate sensitives, and what would be on top of your radar? Where do you think the maximum benefit could come in?
Overall, it was already expected that the rate cut will should happen, but looking at the budget, that there has been already strong liquidity has been flown into the market. So now the possibility of having a strong rate cut is still high, but slightly comparatively is on a lower scale. But still, if it happens, then it will be providing more boost to the economy of our country. So I'm expecting the banking should have a higher expectancy with the rate cut. So I'll be having a strong bet on some counters like IndusInd Bank, Axis Bank, firstly from the private sector banks, are looking very positive on the technical front, and I'm expecting that in the coming period, these counters have a potential to see a kind of a resurgence in the short term time duration. And apart from it, from the private sector bank, CUB, a City Union Bank, and SBI is looking very positive to me. Firstly, CUB have seen a very strong breakout from the zone of nearly 175, and I'm expecting that there can be a decent movement towards the zone of 184 on a positional basis. So this counter should definitely be in the radar, while SBI from short or even for long term duration is looking positive, and there is a potential for this counter to have a kind of a strong resurgence because it has moved above the 20-day exponential moving average, and I'm expecting with the kind of a market and with the kind of a sentimental turnaround, there is a possibility for this counter to retest the zone of 820 in the short term time period.
Okay, got that. Well, also, we'll thank you then on that note for being with us on the morning edition of Market Today, helping us navigate through the indices and through key sectors and stocks that one should keep on their radar. Off to a positive start, 23,787. We're nearing the high point that we opened with. Let's hope that this improves from here on. The Nifty Bank is also gaining some strength. 50,328 back on the Nifty Bank, 0.3% higher. And when we look at all the key sectors, the mid and the small caps are definitely doing better. Now the mid cap index is up 1.2%, small caps up 1.8%. So it's the broader markets that's definitely in thick trade. Along with this, we are also looking at gains coming in on the media stocks, on the metal stocks today. PSU banks are higher. You have oil and gas also in thick trade, pharma, realty, private banks. I think all the sectors, barring just some losses on, say, FMCG, auto space, and also slight losses being seen on. No, actually, all the sectors barring these two have pulled up into the green. And so FMCG auto on the back foot, but rest of them actually up and about in trade. And of course, the Nifty at 23,779. Let's see whether it improves from here on, but good start. And we are seeing things come to shape. And of course, the next big trigger, as we just discussed, will be the RBI's monetary policy. Friday is when we will finally get to know whether a rate cut has happened, something which the markets are already penciling in. And we'll see whether that provides some support to the rate-sensitive sectors. We'll wrap it up at that, viewers, but do stay tuned on to Business Today Television to catch all the updates as far as the market coverage is concerned, and of course, post-budget analysis that continues on Business Today Television. Stay tuned.
Hello and a very warm welcome to this India Today, Business Today